Good morning and welcome back to Almus Market Mornings. Now we need to recap on a few things. There was the RBI policy on Wednesday. The central bank left its rates and stance unchanged, though the inflation projection was lowered. And moving on to the global markets, since the US government is in a shutdown, most likely today's NFP will not be released. But the ADP numbers released on Wednesday showed a contraction by 32,000 jobs in September. Gold rose to a record high of almost $3,900 per ounce. And when it comes to the dollar, mostly things were range bound. Good morning, JK. What do you make of the RBI policy, and how long do you think the US government shutdown will last?
Good morning, Swaraj. So the shutdown aspect is I'm slightly skeptical that it will end very soon because the bipartisan differences between Republicans and Democrats is too wide. It can drag on. Of course, in the absence of that, government releases, we actually have to now depend upon the private releases on several parameters. Some of them we got yesterday and day before. The ADP payrolls, the private payroll report was one where there was a drop of 32,000. That is negative number in September, and even the August number was revised down from plus 51,000 to minus 3,000. So this is actually 4 BP revision pricing in the December Fed fund futures, to the downside. Now, if you look at the average payroll revision, considering whatever has come, the last 6 months we have average payroll of 22,500 job creation. Previous 6 months was as much as 1,70,000. That clearly shows how the job market has been deteriorating. Now, also, we also had the Challenger job cuts report. That is the number of people removed from jobs by the U.S. employers. That of course came at 54,064 in September 25 versus 85,917. While that is a decline, but overall in this year, there has been a total of 9,46,426 job cuts, which is the highest since 2020. And the fifth largest in 36 years. The government sector also announced a lot of cuts this year under the DOGE program. So that's also added to the job cuts. So there is a definite decline in the overall employment. And earlier last week, we also saw the job openings also had been steadily falling. Of course, we did not have the weekly jobless claims data, which would have ideally come yesterday if the government releases were to be available. We also had the ISM manufacturing data, which was, of course, more or less steady, but we did see a deterioration in the new orders. Overall employment was still in contraction. The prices paid were, of course, slightly lower. So that's another release that was available for manufacturing that is not really expanding. It is still in the contraction territory, but slightly closer to the mean level of 50. So the situation on US economy is still very uncertain, and of course to answer you, the shutdown, if it prolongs much longer, it can have a much deeper impact because the government activities and wages payment and eventually the consumption will all get affected. Apart from the US side, we also had the Eurozone unemployment data and the inflation number. Inflation number came slightly higher, just like the German number. But again, nothing to worry about it as such because the energy prices are still down, and because of the impact on the exports from Eurozone to US, the extra production that is available now in the domestic market will actually push down the prices, so that will keep the inflation under check. Unemployment rose to 6.3 from all-time low of 6.2%. So that's showing some deterioration in the employment situation as well. So overall, the global market situation is one of uh, steadiness, but then there is a bit of nervousness underneath, because U.S. government shutdown can impact the risk sentiment. Then there is continued concern about the overvaluation of the stocks. And the economy that is deteriorating at the same time. And Fed also has limited numbers to process in the absence of official data for their monetary policy consideration. So I think the dollar will continue to remain in the range, but probably a bit of strengthening bias is definitely visible. That was also visible in gold and silver yesterday, which saw one more bout of good profit taking. At one point of time, gold was down almost 2% from its peak, and of course, it has since recovered as well, because the rise in the year has been so high that you cannot fault people from taking profit out of the books. Now. On to RBI, there was no big surprise. Monetary policy showed no change in the policy rate, as we indicated. Also, as we indicated, the inflation number was revised down. 2.6% forecast from 3.1% forecast in the earlier meeting. To my surprise, the growth estimate was revised upwards to 6.8 from 6.5%. This is in the face of the challenges that we are having on the global side, particularly the US tariffs, which will impact our exports and perhaps the employment sector also. However, the policy has gone beyond the rates and forecasts, and there is a structural easing and regulatory overall, which has been aimed at boosting the credit flow, bank profitability, and financial stability. By the RBI, the key measures include banks to finance M&A using shares, larger credit limit for financing against shares, also for relaxing overlapping rules on bank group structures, introducing risk-sensitive Basel III capital norms, all of which has been a good move by the RBI. While strengthening the risk management, it is also eased credit flow to key sectors, which has been some sort of a constraint that has been seen so far. There has been easing of guideline for realization on the export proceeds. Up to some limit, you can close the export realization, as well as the import bill of entry for limit up to 10 lakhs. That is also available. There is a simplification of regulations and FEMA, for external commercial borrowing also. There is, allowing overseas banks, to be lent in INR. That's another big change, and even the balances in Rupee accounts can now be deployed for investments in corporate bonds and commercial papers in India, making it the Rupee investment or Rupee pricing more attractive. Also, there is a consideration to raise investment cap for individual foreign investors, including NRIs. So I think market is more looking at these measures, which have considerably eased the bank financing, as well as some of the regulatory constraints that have been removed. So the reaction from Indian stock market was quite positive on Wednesday, almost rising 1% from the lows. Looks like we can have some more recovery, considering that Indian market has been underperforming its peers across the globe, and so that we can see some more recovery in the market. And of course, we need to wait for other developments on the trade also. As far as the rupee is concerned, yes, we did see some strength returning to the rupee. Not much, about 10 paisa move on the lower side for the dollar. But this is also happening after several attempts to break 88.80 has failed. RBI being the major factor in this regard, and going forward, we also expect good amount of flows in the coming days, because as many as 17 IPOs have been planned, and as much as 7 billion is what the companies are looking to raise as well. So this can keep the rupee somewhat on the stronger side, at least for the near term. And then, of course, we will wait for the trade discussions that is likely to proceed in November, as per official indications. Also, remember that November 5th is the day on which the US Supreme Court is expected to give its judgment on Trump's tariff, which had been struck down by the appellate court as well. Technically, also, it does look that USD-INR can make one stab on the downside. Of course, supported by flows. Overall, I think in the absence of too much of US economic data, we will rely on the private data and also data from other regions to assess the dollar's direction. At least for now, markets look to be in a steady state, but then we'll see how the discussion or the congressional discussion on the spending bill of the US government proceeds. Thank you.
Thank you, JK. And as you mentioned, in the absence of US government shutdown, we are looking at the private data. Even the weekly jobless claims, which was due to be released yesterday, was not released due to the shutdown. ADP numbers, of course, showed some sort of a contraction. On the other hand, when it comes to the Eurozone, inflation was slightly higher, but nothing to be concerned about because energy prices are still down. Gold and silver both saw some profit taking. And since then, it has slightly recovered. When it comes to RBI decision, there was no change in policy rate. Inflation forecast was lowered. Growth numbers revised higher for this year. There is also the structural regulatory easing that the central bank has announced. A whole host of measures to ease credit flow and some other simplifications. Rupee saw some minor strength on Wednesday. Good amount of flows are expected via IPOs in the coming days, which can keep the rupee on the slightly stronger side. That's it from us today. Thanks for listening. Have a good weekend. We'll catch up on Monday with the fresh round of updates.